If you're aiming to make 600 a day in Forex, there's a straightforward way to get there without risking a huge investment. Today I'm showing you how to use a $10,000 account from FTMO, pass their challenge, and apply a profitable trading strategy to hit those daily targets. FTMO's $10,000 account gives you access to capital without risking your own money. Apparently there's a promotion now. You can join the $10,000 challenge for 89 euros. You also have an unlimited time frame to meet the profit target, which removes the pressure and lets you focus on consistent trading account growth. Here's a quick overview of the FTMO's challenge requirements for the $10,000 account. Maximum daily loss of $500, so you can't lose more than $500 in a single day. Maximum total loss is $1,000. That's the overall drawdown limit. Profit target $1,000. You'll need to make $1,000 to pass the challenge. Passing this challenge means FTMO will fund your account and 90% of the profit you make you can keep. In today's day and age, this is the smartest way to make money in Forex. You pay a small fee of $89, you pass the challenge, you get a refund, and you get a nice big balance of $10,000 to potentially trade with and make a lot of money this way. This is the easiest way without risking a lot of your capital. Step 2 is my strategy to pass the FTMO challenge. To consistently reach daily profits, I use a two-part strategy involving the 20 and 50 simple moving averages. Here's how the SMA strategy works in a trending market. So there are two main ways to trade this strategy, the breakout or the retest. When the price breaks above both SMA lines, it often signals the start of a trend. This is our cue to enter the trade. Then there's the retest. Sometimes after a breakout, the price retraces to retest the SMA levels before continuing the trend. If the price comes back to these levels, that's another great opportunity to enter the trade. Okay, now let's move on to the Fibonacci levels. 50%, 61.8 and 78.6 are the main ones we're gonna use. They will help us plan our exit and secure our profits. Here's how we're gonna do it. We're gonna lock in our profits at key market levels. Take partial profits as the price reaches each Fibonacci level. This locks in gains early and reduces the chance of turning a profitable trade into a loss. Talking about losses, you can trail your stop loss with the Fibonacci. Adjust your stop loss to break even or higher as the price moves through these levels. That way, even if the price reverses, you protected your profit. This approach will keep your risk low and ensures you're maximizing your potential profits. Alright, I want to give you a more in-depth look at this trading strategy. First off, I use a particular trading indicator for the Fibonacci. It's one of my favorites and you can find it on TradingView under Auto Fib Retracement Alert in the Indicators tab. This indicator automatically draws Fibonacci lines from higher time frames, highlighting key support and resistance zones. I found these levels to be more reliable for my trading setups. Now onto the trade. We start by waiting for candlesticks to break above our 20 and 50 moving averages. This signals that a potential trade setup might be forming. In this case, we saw a bullish engulfing candlestick close and it's above both moving averages. However, the small catch is the Fibonacci line is likely to react as a resistance, and this hasn't been broken. We can wait for the candlesticks to break the Fibonacci line and enter on the breakout, or we can wait for a pullback to the moving averages, allowing us some room to move towards that Fibonacci resistance level. If we enter in on the retracement, it's quite straightforward. Place the stop loss just below the moving averages, allowing some extra room to account for market noise. Our target profit would ideally be just at that Fibonacci resistance level. This way we are capturing a logical target without over speculating. Now if we fast forward this, boom, hitting our target profit level, which is exactly what we were aiming for. Now that we have completed the retracement trade, let's focus on the breakout opportunity. We can either enter immediately or wait for a slight pullback. Often after a big movement, there's a brief retracement to the previous sensitivity zone, in this case the Fibonacci level, which has now shifted from being a resistance to a support. For the breakout trade, we set our stop loss below the Fibonacci line, and that is the minimum. Ideally, you want to cover at least the 20 moving average as well, leaving a little extra space to avoid getting stopped out by market fluctuations. Remember, each new candlestick will move the moving averages as well, so you might not need as big of a stop loss as you may think. As long as there's no sudden movements, the moving averages will get covered by your stop loss, but you need to cover the Fibonacci line always. Our target profit level is near the next Fibonacci line. I like to have it a couple of pips below just because I feel like the target profit gets hit quite more often than on the lines. So the risk is shared between the two trades we actually placed. You know, there's one trading setup, so there's one opportunity, but we found two trades in it. This way it results in a more balanced and powerful trading approach. Remember, this isn't just some random trading, it's strategic risk management. You're making thoughtful trading decisions on where you're going to enter and exit the trade for favorable results. This arguably is more crucial than the strategy itself, if not more. Step 3 is very important. Calculate the right lot size every trade you're going to take. FTMO strict rules means you have to calculate the correct losses every time. For a $10,000 account, I recommend sticking to 1% per trade, which is $100. To calculate this precisely, use a lot size calculator. I'll link one in my description. So account size is $10,000. Risk per trade, we're going to put 1% or $100. Stop loss distance will be dependent on the trade you take, but just make sure you're not, breaking the FTMO's rules and you'll be fine. I'm sure if you study this strategy and study my other videos as well, you will have a complete understanding of how I actually trade and how I manage to pass all my funded challenges. I'm actually one of the top traders on TradingView as well, and I'm gonna do a challenge next month, so that's gonna be exciting. I might make a video about it. So if you enjoy this type of stuff, make sure to subscribe, watch this video next, and take care guys. Have a wonderful day, stay safe, and goodbye.